Let's think back to the 2024 election. Every major pollster, every expert, they were all calling the race a complete 50-50 coin flip. But while all that was happening, one mysterious trader was quietly placing this massive, completely contrarian bet. They saw something that nobody else did, and, well, it paid off in a way that is seriously hard to believe. That trader, known only as the Trump whale, walked away with $85 million in profit. And listen, this wasn't like winning the lottery. This was a calculated move. And it was based on this incredibly powerful new forecasting tool that is sending absolute shockwaves through the worlds of both finance and betting. See, the whale didn't just get lucky. They actually commissioned their own private research that completely sidestepped the flaws of traditional polling. And their massive success perfectly highlights the power of the platforms they were using, prediction markets. So this is the story of how they work, why they're so ridiculously accurate, and why they really do represent a new frontier of trading and gambling. All right, so let's dive right into the moment these markets went from being some niche idea to a global phenomenon. And that moment was, of course, the 2024 election. I mean, just look at the growth on Polymarket, which is one of the leading platforms. It was absolutely insane. They went from $54 million in trading volume in January all the way up to over $2.6 billion in November. We are talking about a 48-fold increase. And it wasn't just the money. Their user base exploded by 78 times in that same year. They had 300,000 new users sign up in October alone, all because of the election. And here's the real kicker. While all the polls were seeing a dead heat, the traders on Polymarket, who were putting their own real money on the line, they gave Trump a 58% chance of victory days before the election. Then, on election night, that probability surged to 95% hours before any news network was ready to call the race. The market saw the future in real time. So what are these things exactly? The answer is really this fascinating hybrid. It's like what you would get if Wall Street and Las Vegas had a baby. It sits right at that intersection of sophisticated financial trading and high-stakes gambling. Okay, so a prediction market is basically a stock market, but for events. You buy and sell shares in an outcome. Could be an election, a sports game, or even if the Fed will raise interest rates. So if a yes share for an event is trading at, say, 60 cents, that means the market collectively thinks there's a 60% chance of it happening. If you're right, your share pays out a full $1. If you're wrong, it's worth $0. It's really that simple. And this is where you can really see that split personality. On one hand, it's all Wall Street. The contracts are structured like complex financial products, and the federal government actually regulates them as a commodity. Deep research and skill, like what the Trump whale did, can give you a serious edge. But on the other hand, it's pure Las Vegas. The outcomes are binary. You either win or you lose. It's all about real-world chance. It's super entertaining, and that's why 36 states are arguing it's no different than sports betting. So, as you can imagine, this dual identity has kicked off an incredible regulatory battle. It's a true tug-of-war for the soul of this industry. You have the federal government and the states in this massive disagreement over what these markets actually are. Now, at the federal level, the industry scored this landmark victory. In 2024, a regulated platform called Kalshi sued the Commodity Futures Trading Commission, the CFTC, and the court actually sided with Kalshi. It ruled that predicting elections is not gaming. When the CFTC finally dropped its appeal in 2025, it opened the door for the first legally regulated election markets in the U.S. in over a century. A huge deal. But, and this is a big but, here's the twist. Despite that federal green light, you have this coalition of 36 state attorneys general pushing back hard. They're arguing these platforms are just skirting gambling laws and should be regulated like any other sportsbook. This has created this really weird situation where something can be totally legal at the federal level, but still get blocked by your state. Yet, even with all this regulatory chaos, the smart money, well, it's not waiting on the sidelines. We are seeing a tidal wave of institutional investment pouring into this space, betting that the potential here is absolutely astronomical. Let's talk numbers. $2 billion. That's how much Intercontinental Exchange, the company that owns the New York Stock Exchange, invested in Polymarket in late 2025. You just can't get a bigger stamp of approval from the heart of the financial establishment than that. And thanks to that investment and its explosive growth, Polymarket is now valued at a whopping $9 billion. That cements its status as a tech unicorn many, many times over. And if you think that's big, the long-term projections are even more staggering. Industry analysts are projecting that the entire prediction market sector is going to grow from just $1.4 billion in 2024 to over $95 billion by 2035. That's a compound annual growth rate of nearly 47%. Just incredible. And it's not just the owner of the NYSE. We're talking about the absolute who's who of venture capital. Sequoia, Andreessen Horowitz, Peter Thiel's Founders Fund. On top of that, the industry is going mainstream, with platforms like Robinhood building prediction markets right into their app. The smart money is already here. So why all the excitement? Why is all this money pouring in? Well, it really boils down to this. Foundational research from the National Bureau of Economic Research found that the most notable feature of these markets is just how accurate they are. They consistently, and I mean consistently, outperform professional forecasters and traditional polls. Turns out, when people have real skin in the game, the wisdom of the crowd gets incredibly sharp. And that leaves us with a pretty wild final thought. These markets are already these unbelievably powerful forecasting engines. At the exact same time, AI is also getting remarkably good at predicting outcomes. So the question becomes, when you combine the incredible wisdom of the crowd with the raw power of artificial intelligence, does the very idea of a human expert become obsolete?